Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Stocks searching for direction following the Fed meeting and that uncertainty over Iran. We'll trade all of it with the investment committee. Joining me for the hour today, Josh Brown, Stephanie Link, Jenny Harrington, Jason Snipe. Our senior economics correspondent, Steve Leisman, is with us as well. As we check the markets here, we are mixed across the board. So we're thinking about the Middle East. We're apparently 2 weeks away from any kind of decision there, according to the president. The markets obviously are reacting to the Fed meeting a couple of days ago and Powell's comments, which were deemed to be more hawkish than not. Yields are up, maybe representing all of that. Josh, what do I do with all of this?
Well, I think the question of whether or not we can make a new high, I think we have to give that a little bit of time to breathe because historically, it doesn't really happen right away. In fact, that's fairly rare. What tends to happen after a 20% drawdown, when you come all the way back to within 5% of those old highs, is you stall out a little bit. We're coming off of one of the best 40-day periods ever for the S&P. We've had this huge rally from negative 20% all the way back to within a couple of percent. And if history is any guide, the average period of time it takes that you have to stall out just below those highs is about 3.6 months. We're about 1.1 month since we got, within 5%. So just a very quick example that everyone can relate to because it just happened. In July of 2023, I was probably on the show. We were probably having the same conversation. Can we make a new high? We had just come back from that horrific bear market in 2022, and we had to stall out a little bit. It took 6 months in order to get that new high back in the summer of 2023, but ultimately we got it. So it's early. We got to within 5% after just an absolute brutal, very fast but very sharp bear market. We might have to tread water a little bit here, and that would be perfect. That would be about August would be 3.6 months from when we got back to within 5%. So let it breathe. The jury's still out. We don't know if it'll happen, but it's certainly, there's nothing wrong with biding our time at these levels.
Tread water, Steph, because we need to do so. We need to buy ourselves some time, it sounds, until we figure out whether there's going to be this tariff inflation or not. That was the word from Powell. Just continued stay the course, which is stay the course of doing nothing and trying to watch and look around all the corners to see what might be coming. And they just don't know.
Right. We're watching the geopolitics. I'm assuming there's going to be a resolution. So that means we focus back on the economy and back on the Fed. The economy is actually doing just fine. We're running at about 2% in terms of GDP. The consumer is hanging in there, despite the soft surveys and the confidence numbers, but they are spending. Inflation is coming down. That's good. I will say there's this one yellow flag, Scott, that's new for me, and that is that the weekly jobless claims,
yeah, they're elevated. They're
going higher. Now, 240,000 roughly the last 3 weeks is not concerning, but we were at 200 to 210. So just watching the direction and the speed of that, I think 260 and higher will get me more concerned. But for now, I feel okay. And so the pullbacks, I think, in the market are going to be shallow, mainly because there's $7 trillion of cash on the sidelines. What I just mentioned about the economy hanging in and doing fairly well, and that leads to earnings. And I always bring it back to earnings, Scott. I know I'm a broken record on it, but it's the thing that drives stocks on the way up and on the way down. And numbers are going to, I think the second quarter numbers are going to be pretty good. And we only have to wait two and a half weeks for the banks to start telling us that.
Yeah. Tom Lee also thinks that pullbacks are going to be shallow, says buy the dip. He'll be on Closing Bell with me a little later this afternoon, so you can hear directly from him and get a little more granular detail onto why he believes that.
Yeah, I don't think it matters. And I'll tell you why. Because 1 year ago, the 10-year was at 4.35. Today, the 10-year is at roughly 4.35. The Fed cut 100 basis points last year. And the short end of the curve isn't really what impacts the stock market. What really impacts it are 2-year, 5-year, 10-year Treasury yields. And so they didn't move with the Fed cutting. And that's because we have a fiscal spending problem and we have a supply-demand problem for our bonds. So I think what really matters is how the 10-year responds to that. And so what I think could happen is if and when the Fed cuts, maybe there's a near-term psychological pop in the market because, traders like that. But then reality sets in. And if bond yields don't move, that doesn't do anything for corporate America. It doesn't do anything for individuals. It doesn't do anything for mortgage rates, car lending rates, credit card rates. So that's what matters. And so I don't know that the Fed can contend with the bigger problems we have, which is a budget deficit that's totally out of control and a government that's showing no signs of acting responsibly. That's what's going to impact the rates that actually matter to the market.
Jason, how do you see it?
Yeah, no, I think Jenny makes some great points, but I do think psychologically it is important for the Fed to, at least from a directional perspective, we know where they're going. I think that does play in the market. Yes, the 10-year is a proxy for all the numbers that Jenny just mentioned. I think to Steph's point as well, earnings, 2 weeks. We had obviously very strong earnings in the first quarter. Yes, revisions have come down somewhat, but I do think they'll be better than expected, which I think is going to be important in the next catalyst for the market. So that's really what we're paying attention to.
Yeah, I mean, I just wonder how much of a tell on anything second quarter earnings are going to give you. Mm-hmm. It's like the inflation data now is still kind of too soon. Yeah. That's what Powell's problem is.
Right.
He's not willing to go out on a limb on either direction because he just doesn't know. Waller feels like he can be a little more forward because it doesn't sound like he wants the Fed to be in a position where it has to react to some flames that turn into something bigger than they need to be.
Yeah, there's no doubt about it. And obviously, the difference between Waller and Powell's perspective is significant, right? Waller believes this is going to be a pass-through event, one time, but we'll see how that plays out. I think at least what we've seen thus far is corporations and enterprise has been willing to digest that pill. We'll see if they pass that through to the consumer. I think we'll likely see that in Q2.
Gosh, it feels like the same sort of equity stories are the ones that are dominant every week, if not almost every day. AI, investing, mega caps making the news, incremental investing dollars going to the mega caps, which is why the NASDAQ has done better than most everything else over almost any period of recent time you want to do. I bring that up because all the news today, Meta doing this, Microsoft doing that, Apple thinking about this, and Amazon doing what it does. And everything else seems like a sideshow at the moment.
Yeah, I don't think market participants are spending a ton of time worried about the timing of the next interest rate cut. I agree with what Jenny had to say. It's not a stock market story right now. There's an ebb and a flow to how much we pay attention to the Fed at any given juncture. What I would tell you is if we all of a sudden started printing claims numbers, 255, 260, if we start getting into that area, at least the people that I talk to, that's when they think the market will sit up and start putting that minute focus of attention on the Fed's every word. And we're close, but we're sort of just not there. And Stephanie made the most important point, which is that all you had to understand was what the earnings picture was. By the time we got into late April, early May, we knew the quarter would be fine. The beat rate was good. The percentage of companies beating, the degree to which they were beating, the breadth of the beats, almost every sector had a majority of the larger companies doing well in earnings. If you just have that component to the market, it doesn't make a difference if you're getting 2 cuts or 3 cuts or 1 cut this year. At least not yet. So I agree with the comments from the panel. As to what stocks are working, look, I'm focused on the best performing stocks in the market. That's why we're keeping our best stocks list. And the great news is it's industrials, it's healthcare, it's financials, in addition to tech. It's not just all tech. And I continue to see incredible setups on an individual stock basis. And so long as that's the case, that's what the market's really reacting to. Great Oracle last week, AMD last week. Reports like those make people want to buy. Announcements like those, AI announcements, way more than whatever Fed governor happens to give the speech.
No, it's a good point. It's a good point. JP Morgan, that our own Hugh Sohn scooped, that JP Morgan is beefing up its mobile app with bond trading as the bank targets $1 trillion in assets. Just wants to give people more tools, investors more tools to be able to trade bonds more easily.
I suppose there'll be a market for it. I'm not sure how excited the average investor is to go on an app and pick individual CUSIPs for bonds. But listen, it's certainly not a negative. I think if J.P. Morgan, I think of J.P. Morgan as probably the large banking institution that has done the best with its digital strategy and seems to be the most aggressive, probably neck and neck with Morgan Stanley in that regard. Both of these firms have just demonstrated a really unique ability to stay abreast of what's happening in fintech, bring it in-house, and provide a version of it to their customers, or if they were a tech company, they would call them users. But yeah, I mean, J.P. Morgan is at the vanguard of most of the large technological trends among the big banks.
I want to hit a couple of things before we get out of here for the very first block. We talked somewhat about the mega caps, and I don't want to go any deeper on that, but IBM is worth another mention. Can't believe I'm saying that, but it is. It is.
We've been telling you that for 2 years.
The stock chart says mention it. Longer period of time, not intraday, please. The target goes to 325 from 300. Outperform from Dan Ives at Wedbush. Acknowledges the fact that the stock's already had a great run. He says it's still under-owned and still in the early stages of a renaissance of growth, with AI being the key driver. It took them a while to get the Red Hat acquisition integrated, and Arvind, the CEO, kept telling you, we're going to do it. Trust me, it's going to work. You're like, I don't know, man. It's like IBM. Have you seen what the stock's done for all the years prior? He's like, trust me, it's going to work. And he has the last laugh today. There's no doubt about that if you look at the chart. Correct?
Absolutely. When I was buying it, it was trading at 12 times earnings, and it yielded over 5%. Nobody believed the 5% yield.
Oh, I did.
Okay, you did. But I'm just saying I didn't believe it, but I still bought it. But I think, yeah, the strategy of diversifying away from it being a mainframe company to AI, cloud, data center, blockchain, all of these things will lead to better growth going forward. They might even have better growth than Accenture. I know we're going to talk about that later, but I will say they are taking market share, and to the point of it being under-owned on the buy side for sure, but on the sell side, there are only 10 buys on this stock.
There was a reason to under-own it. From 21 to 23.
No. That's the reason to own it.
When it went sideways for seemingly forever?
Yes, that was the reason to own it. And this is what one of my recurring beefs is people are like, oh, well, it's been flat for the past decade. And I always say your starting point is today. And there was a time about 3 years ago, maybe 2 years ago, where Steph and I were the only two who owned it. And we got into a major pissing match with a short seller who thought we were idiots.
Yes, we did.
Right? For owning it. And you have to look ahead. And you can't look backwards all the time. You can look backwards just to check the rearview mirror and inform what you're doing.
It's outperformed all of the Mag 7 names this year.
Had to look
28% year to date. Now, Oracle's done well. Josh mentioned it. And it was a big earnings winner last week. Cisco, a 52-week high today. I kind of put it in the same category, though not a direct compare. Cisco reiterated overweight. $73 is the target
all AI stocks,
at JP Morgan. Yeah, but people weren't giving them credit as much as they were the other ones, and then lo and behold, they end up outperforming, at least in IBM's case. Now, Cisco has some work to do, but again, like Chuck Robbins is like, we're going to get this right too. And here we go. You own Cisco still, don't you?
Right. Yeah, we own Cisco, and it just got upgraded today. It's trading at 66. The upgrade was to 73, so that's 10%. It should be more than that. It's trading at 16 times earnings, has a 6% free cash flow yield. So this is actually in our growth strategy. And earnings should grow mid to high single digits. That's a pretty compelling setup given this market. And this is another one where you don't look at the past 10 years. You look forward and see what can happen going forward.
I know, but sometimes the last 10 years dictate what the next 10 might be.
But Microsoft was flat for a decade. There's so many great stocks that were flat for a decade, and it kind of goes to Josh's opening comments on the market. Sometimes things just need to consolidate.
All right, we're going to we'll take a quick break. Let's update this move from Josh before I tell you some stocks that are on the move. You bought more Toast. Why now?
Yeah, I think one of the most interesting things about Toast is that most of the analysts who cover it are fintech, payments, and they've done a good job, and most of the price targets are mid-40s, right about where the stock has gotten to, and they're all bullish. But I think we're not thinking about this as having the potential to become an AI consulting company. Most of the large restaurant chains, and the hotel chains and the big hospitality businesses in this country are going to be eager to experiment with making their businesses more efficient with AI. Toast is arguably in one of the closest positions to be able to utilize its software business and its knowledge in this area to actually make that kind of thing happen. So it's just like one more way to win in a stock that's already been a huge winner. So this is now a long-term position for me, and I added to it here in the low 40s. I think it's consolidating before the next move higher.
All right, let's see if it can't get across the flat line and go positive here. CarMax is higher. The earnings revenue beat, comp sales were good. Jenny, that's you.
Yeah, so it's interesting. So it's still down about 10%. This is in our growth portfolio. I think it's a fantastic buy here. And the reason I mentioned the down 10% is because it hasn't run so much this year. So where you stand is retail sales came in at plus 9%. Gross profit was up 13%. And what's I think the most compelling part is that as tariffs do kick in, and cars get more expensive, new cars get more expensive, that's really favorable for the used car market. CarMax had a tough time because there were supply production problems during COVID, and now we're past that. So supply is there, used cars are going to be compelling, trades at 16 times earnings, and the expected growth is 14 to 18% for the next 3 years. Not bad, right?
Yeah, Accenture, that is falling after a drop in bookings. Steph, that's you. It's a 52-week low. For shares of Accenture today.
I know always trades crummy around its earnings reports, but usually it kind of recovers. I don't see this recovering anytime soon. Not when they saw soft bookings, down 6% year over year. Now they're restructuring their services business, which none of us can understand, and they had a gross margin miss. So to me, into strength, I'm likely to trim.
Rocket companies. You've been flagging this, breaking out above its 200-day. Have you, Josh? Tell us more.
Yeah, so this is a really interesting situation because it is both going to be, in my view, one of the biggest beneficiaries if and when interest rates do fall. They don't even have to come down much because effectively this is a mortgage business. And what we want is, at a minimum, a refinancing boom. So if you get rates coming down and not coming down because the economy is crashing, you're going to see a ton of demand for what Rocket does. And I don't think that's in the stock. But more interestingly, now you have Value Act Capital, which is arguably the company, the activist fund that was most behind the turnaround at Microsoft and at Salesforce. They are 9.9% of Rocket now. They bought 15 million shares this spring. And I think that when they get into a situation like this, it's probably something where Rocket is going to at least be willing to listen. They're not the type of activist that comes in and starts saying, we're firing everyone, we want all these board seats. It usually starts with a constructive conversation. So I think that's what this stock needs. They're in the midst of two massive transactions. They're buying a huge mortgage servicing company called Mr. Cooper, and they're buying Redfin, which most people know as like a lead gen website for realtors, also refers a lot of mortgage business. They're trying to checkmate the entire online real estate ecosystem while things are depressed. And when rates come down, mortgage rates come down with them, demand for new mortgages and for refinancings comes back. This is the type of stock that benefits. And that's the play here. And I think it's very, very early to that potential happening.
All right, good-looking chart and a move there as we're talking about Brown's best stocks in the market. Needs a spotlight today on Amphenol. It has been on that list since December 16th of 2024. The AI play, you say, no one is talking about. Why not?
Well, it's a 100-year-old company, and most people think of it as a boring industrial. But as you can see in the stock price over the last year, the world is waking up to a very important concept, which is you cannot build data centers without connectors. And Amphenol is the connector play. Anything to do with power, electricity, printed circuit boards, cables, all of these things have to be connected together in order to make all of the trillions of dollars that the world is spending on cloud, data centers, et cetera, actually function. Look at the first quarter earnings this company reported, $4.8 billion in sales. That's up 48% year over year. Earnings were 63 cents. That's up 58% over the last year. These are AI numbers in a company that prior to the last couple of years, nobody really thought of as having been that important to high tech. Now people are starting to understand this is at the center of this AI infrastructure build-out story. What I like to do with a situation like this, because it's already run a lot, is think about what a good entry might be. I'm looking at like high 80s. I think if you get a low volume pullback, the uptrend is still intact. I don't know that today is definitely the best entry, but people should have this name on their screen. As far as risk management, very obvious. You have a rising 50-day, about 81.5. If you're a short-term trader, that might be a place to exit to the downside. If you're an investor, I think you could have a little bit of a longer leash. I think 71, 72, there's a gap just below that level. That might be a place where you would say, you know what, maybe the story has changed, the sellers have taken control. So long as it can hold that level, though, I think this is a name that you want to be involved with because they affirmed guidance for the year, and everyone who's spending on AI today is probably still going to be spending 3 months from now, 6 months from now, and that's what's happening with this company, and it's a very exciting situation.
All right, when stocks continue to go up, analysts continue to chase. They're doing just that with Netflix today. It's $1,230 as we speak. Pivotal says it's going to $1,600. That's a street high. Also optimism today at Wells. They go to $1,500. They go to overweight, or they reiterate that. Jason Snipe, you own the stock, which just has been a remarkable winner.
It has been a great winner, Scott. I mean, stock's up 37%, obviously year to date. You know, one of the key components for me was operating margins. Operating margins were 32% last quarter. EPS growth was 25%. I think one of the blemishes that we might not talk about enough is, you know, the U.S. growth was only up 9%. So I think as it relates to this call, there is definitely lots of room to run internationally. So that's why I continue to like this stock. Again, they have many levers to pull. Expenses are going to go up this quarter with the content slate that's coming up in the second half. But I think they'll continue to grow margins, and it will continue to be a strong story going forward.
Part of the call, you nail it here. They say it remains underpenetrated globally. They say it offers extremely compelling price to entertainment value. They like the ad tier, which they think the company can continue to grow subs as a result, even if you get a more, Josh, uncertain economic environment. If we have that now, or if it becomes even more so, you drop down to the ad tier, you still get subs, and they think it's a powerful thing.
Yeah, you know what term we don't use anymore on CNBC, or I don't hear it anywhere else? The streaming wars. You know why? The streaming wars were already won, and Netflix won them. You got a stock right here above both major moving averages. RSI is 62, so not overbought. Stock is 3% below its all-time highs. And I have to tell you, if they do go down the road of user-generated content or experimenting with some big YouTube creators who may want to do something a little bit more institutional, a little bit more substantial, that's a whole line of business that no one's even thinking about, in the same way that no one was thinking about live sports even 2 or 3 years ago. And now we're talking about the potential for live sports on Netflix as being literally through the roof. So I'm long, I'm not selling. I don't think it'll go up at the same pace it's been going up, but I also think people are going to want to continue to own it.
For 3 o'clock, I hope you'll join me then. Final trade, Josh Brown, what do you got?
For final trade, I'm going to say Rocket. I remain long.
Thank you. Sorry to interrupt you. Jason Snipe.
KKR.
Jenny.
GXO. New CEO announced today. Stock's up a lot, but it's still compelling valuation, 16 times with great earnings growth.
Steph.
Continue to buy Uber.
A most favored name on this committee. All right, good stuff. I'll see you at 3.
Hey, everybody. Welcome to Blue Cloud Trading. My name is George. It's Sunday, June 22nd. It's after, the events that we heard about with the United States attacking Iran. Looks like we are entering a preemptive type war situation. And that can be really bad. It's going to be bad for all parties. And it's also going to affect the stock market. Now, there is an article here. Investors set to flock to safety as world awaits Iran's response. And one of the things that we should probably see as far as the markets, are concerned is the oil All right, how is oil going to be affected by this? Oil companies. All right, it says here the biggest market reaction since the start of the escalation has been in oil, with Brent futures jumping 11% to $77 a barrel. Traders are preparing for another surge in crude prices, even as it's unclear where the crisis goes from here. The rise is expected to restart on Monday after the U.S. assault dramatically raised the stakes in a region that accounts for a third of global oil output. So, you know, this is now. I actually posted a members only video this weekend, and this is the one right here, 18 hours ago. Now, I actually posted this literally right before the event took place, but interestingly enough, I sort of had the foresight to recognize that there's probably going to be some more issues in relation to that, because I mean I was like listening to the rhetoric of what was going on, and I thought, yeah, it's probably a 60 to 70% chance that he's going to do something based on what he was talking about, and I'm talking about Donald Trump attacking Iran. So what do we do in this scenario, right? Now, one of the things I did personally is I invested in a inverse ETF. I'm going to show you guys what I'm talking about, the SQQQ. Now, I actually added this earlier in the week and just held on to it. And I shared that information with my members, okay? So, and I'm still holding this position going into throughout the weekend. One of the ways that you can sort of hedge your entire portfolio is through these inverse ETFs like the SQQQ. So if you feel like the market's going to drop, now this is certainly not something I would hold for long periods of time. All right, there are some issues related to that, and I talk about that as well with members. But it's maybe a sort of a safe haven, I suppose, or a way to protect your entire portfolio. So what we're going to do in this video, we're going to go over the stocks that Josh Brown talked about on the show. So let's take a look at, I'm going to show you that list right here. And some of those stocks actually are in my portfolio. So I'm going to share that with you, the ones that are. We'll take a look at the indices here and the CNBC stocks. And we'll also, I think I might do a second video a little later. So look out for that one. Where I'll go over the Mag 7 stocks. I'll go over the sectors in that video. In this video, I think I'm also going to take a look at the member requests as well. So we've got Interactive Brokers, Oscar Health, Darden Restaurants, Uber, and Reddit. So we'll look at those. Okay. So what happened on Friday? The Dow was up just 0.08%. The NASDAQ up 0.51%. I'm sorry, not up. It was down 0.51%. So it gapped up in the morning, and then you can see that what happened at around, I would say 9:30 or so, 9:35, 9:40, it started to drop, and it stayed under that prior day's closing price. The S&P 500 was also down 0.22%, and the Russell 2000 down 0.21. What about, let's take a look at the S&P 500. How did the stocks do here? We can see Google was down 3.85, Meta down 1.93, Eli Lilly down 2.84, Oracle, Palantir, Microsoft, Nvidia all down, Broadcom. The energy stocks did well. A lot of the financials did well. Consumer defensive stocks did well, and industrials did well. Not all of them, right? The aerospace and defense did quite well. And then if we take a look here, the one-day performance for Friday, energy, consumer defensive. These are places people hide when the market is uncertain. Here's the 1 week performance. I mean, all of these sectors were down this week except for one. Energy, up 1.75%. Look at healthcare, down 3.46. Basic materials down 2.83. Communications services down 2.46. So you have to be really cautious going into next week, honestly. And so, yeah, be very, very careful with your about adding new positions in these sectors. I would be focusing more on energy, consumer defensives. Those are the ones to look out for. So let's start off with the S&P 500 here, the SPY ETF. I mean, we can look at the technicals right now, and I can show you. Here's just the Ichimoku indicator. Okay, what that basically shows us is the direction, the strength of the trend, and what's happening right now as we speak. And you can see those candles right there. Those represent the last few days. Okay, so we had Tuesday right there. Okay, Tuesday, June 17th. Remember, and this is Wednesday, June 18th. And I remember Thursday we didn't have a trading day because the market was closed due to Juneteenth. And here's Friday. So for 3 days in a row, price on the S&P 500 was under the 9-period moving average of the Ichimoku. It's still holding above Kijinsen, but there's weakness happening towards the end of the week. You know, it's uncertain what we're going to see. We might see a big gap up in the morning on Monday. You know, the uncertainty of war can cause markets to drop significantly. Look at the volume here increasing, and then the negative DI. One of the other indicators I like to use is the directional movement index. The negative DI 9 is above the positive DI 9. That's very bearish. So that's on the daily chart. Let's look at the weekly on the SPY. Okay, so yeah, there's the down candle there. It's more than likely to pull back some more, and maybe we'll find some support at the cloud, which is about 3% away from where we currently are. How about the QQQ ETF? Couple of reversal candles there, right, from the prior week, Friday, June 13th, and here's another one, June 20th, right? So 2 weekly candles that are showing reversal possibly happening here, and then again the Qs did the same thing. On the daily chart, dropped under the 9-period. FEZ, 4 days in a row. That's the Euro stocks. So it happened right there when price got under the Tenkan-sen, and then the very next day on Tuesday, Wednesday, and then on Friday, still dropping. Here's the weekly chart on the FEZ. Okay. We had a reversal candle the prior week ending June 13th, and then it got under that low and it's dropping some more. It might be short-lived. We don't know exactly. It's everything is now in the unknown place, right? You can't really make any estimates about where the market's going to be next week until this whole thing clears over, until the tariffs clear over. There's just so many issues right now. You've got the war in with Russia and in Europe. So we've got so many things happening. You know, there's a lot of uncertainty. It's not conducive to a market where people want to invest. And so the reason I used, technical analysis in this indicator, the Ichimoku, is because it's going to sort of show me what the masses are doing, essentially. What are the masses? What are the traders out there doing? We can see it here because these little candlesticks represent price, right? And for those of you who are unfamiliar with candlesticks, I mean, I'll just give you a brief little overview here. If you see a green candle or a bullish candle, the opening price, okay, is where the body begins down here, and the closing price is at the top. What the wick represents is the movement of the price throughout that day. If we're looking at a daily candle, all right, so that would be the low of the day, and that would be the high of the day. But then it finally closed right there at 4 p.m. Alternatively, on the negative candles, the opening price is there at the top of the actual body of the candle. The closing price is right there. That shows the wick shows how low the price got and how high at the top there. So it gives us a lot of information. That's why Japanese candlesticks are great, because they can quickly, you can see what's going on here, right? The opening price and the closing price, the high and the low. So that's the weekly. Here's the daily chart on the Dow Jones. Dow Jones is probably looking the weakest right now out of the ones that I just showed you because it's under both moving averages. Okay, it's under the Kijinsen. The red line is the 26-period moving average. The next support level is probably around this level here where the prior low is, 413, and that's maybe another almost 2% away. Russell 2000 stuck in between the two moving averages, so it's just going sideways. Nothing happening here. That was also down 0.21, and then the VIX also was up 2.38. I'm going to guess on Monday it's going to be spiking a lot more than that. I think that's part of the reason why Donald Trump waited until the weekend to basically, do the attack. So there wouldn't be, it wouldn't affect, people could process the information of, you know, in the stock market. But it's going to be interesting to see what happens tomorrow. I'm curious to see what happens on Monday. Let's see. So let's take a look at the stocks that Josh Brown. I'm not covering all the stocks, just the ones that he talked about in the show. JP Morgan up 0.38%. Let's throw on the more information here. Now, this is a stock that I actually still have a position in. I added this one on May 13th. I shared that with members. It's up over 5%, still moving up. IBM, I don't have a position in this, but it's a very strong trend. You can see that on the daily and on the weekly chart. Very, very strong trends here. On the daily chart, it came down, touched the 9 period, and it bounced off of it, as you can see, and closed up. It was down 0.79%, but that's a bullish candle. All of these, though, like I said, are going to be impacted by the geopolitical issues. So I'm not sure where these are going, into Monday. That's why I'm protecting myself with the inverse ETF. APH, Afinal Corporation. This one looks pretty good too. Maybe a little toppy up here on the weekly chart. You can see that we developed a reversal candle. That's called a spinning top. And those are bearish. Okay, if they happen at the top of a move up, that's very bearish. So what's happening? It's kind of stalling on the weekly chart. Here's the daily. So you can see it's just sort of, going sideways here, building a little base. If it gets under the Tenkan-sen and Kijun-sen, then expect it to drop. I'm curious. Like I said, I don't know how these other sectors like technology are going to do in this environment. I know oil should do well. Netflix. Here's a position that I have in. I added this one on June 16th. I'm still holding it. It's moved up a little bit, but there are some reversal candles that are forming here. That's the daily, and here's the weekly chart. Pretty strong. Oracle is another stock that I have a position in. This is the weekly chart. We can see that we developed a bearish harami. So I'm going to show you guys that in a second. Now, I closed out of this position. I added this on June 12th, and I closed out, not much later, right? June 16th. And I took a 12.2% profit on that. It has declined a little bit. It's still technically sound, all right, as far as holding above the moving averages. But this type of pattern is pretty bearish, and it happened on the daily, and it also happened on the weekly, right? So there's a bearish harami. Now, what is that exactly? When you have a large candle followed by a small red candle, and that red candle is within the body, okay, that's what they call a bearish harami. I'll show you guys that right here. Under bearish double candle patterns, there it is, okay? So, yeah, I mean, these can lead to declines. Not always, right? But it's sort of a heads up that things might. I'd want to wait until price got back above that high there before I consider a new long position in Oracle at this point. TOST is another one Josh Brown talked about. Let's look at the weekly chart first on this one. So it's been stalling. It had broken through that 44.12 level based on that prior high right there. But then for multiple weeks now, it's been just kind of staying under, as you can see, right? So not something I'd be jumping into. And here's the daily chart. You can see the decline that's taking place. All right. Maybe it's building a little bit of a bearish, bull flag type situation. So if price can break through some trend lines here and above that 44.12 level, there's some, potential. But right now, it's not the time to be jumping in. What about RKT, Rocket Companies? Here's the weekly chart. Currently under the Ichimoku cloud. So one of the rules of Ichimoku, you should not trade a position or a stock or ETF if price is under the cloud or inside the cloud. Okay, you always want to wait for it to break above. Generally, that means that when price is under, it's in bearish territory. As you can see here, it was in bullish territory when it was above the clouds. Price moved up. When it got under over here, price moved down. All right, and then when it's inside the cloud, it's pretty neutral. and it's not really recommended to be adding at that point because neither the buyers or the sellers are in control. So you want to be owning stocks where there is demand and the buyers are the ones taking control. Now, on the weekly chart, the positive with Rocket recently is on the directional movement index, that other indicator that I like to use as a confirmation tool. That's looking bullish. You can see the green line is above the red line. ADX is moving up, meaning that the momentum is increasing to the upside. But I wouldn't be adding here just based on the Ichimoku part. What else? Oh yeah, we're going to talk about members requests. And like I said, I'll cover the Mag 7s and the sectors in another video. So let's look at interactive brokers. And this is one of the requests from our members. Now, on the weekly chart, it's very interesting because it looks to me like the Tenkan and Kijun are about to cross in a positive way, right? Where the green line maybe crosses back above the red line because it has been moving up. It hasn't happened yet. Now, is this a buy signal? Not in my opinion yet, not yet, okay? Price is kind of stalling also. It's just building a little bit of a base here on the weekly chart for multiple weeks. So I'd probably want to wait until it broke through these levels here first, right? I'd want to see a candle forming above that level. Has not happened on the weekly. Here's the daily chart. Again, consolidating still. Overall, is this still in an uptrend? Yes, it is. But showing a little bit of weakness right here this on Friday, down 2.4% and just barely holding up. Let's hope that it's not impacted by the situation that we just talked about. Oscar Health Inc. Healthcare plans. All right, this is in the healthcare sector. Here's the weekly chart. You can see this week it popped. It was up 13.05% on Friday. Once it broke through that 1756 level, okay, and this is something that I was watching for a while. You can see down below, if you look at that little box that pops up, see how it says created February 20th, 2025. That's a trend line that I created back then. In fact, I think it even says, yeah. So you can see it's based on these prior highs right there. Now, look what happened. Let's go back in time. And this is why I also like to use horizontal trend lines for, it helps me with identifying when things start to change, basically. Here it stalled right there. It stalled again a second time. It stalled multiple times here, right? And then finally broke, okay, on Wednesday. This was Wednesday's candle, or popped. And, that's the beginning of a potential move here. Now, what happened the very next day on Friday, June 20th? Because on Wednesday, you remember Thursday, there was no trading due to the holiday. But the very next day on Friday, you can see the demand started to come in. There were a lot of people looking at this probably chart, the same exact chart. And guess what? A lot of buying started taking place, pre-market and aftermarket, which made it pop. Now, it's up 13%. However, like I said before, when you get a reversal candle like this, I wouldn't be recommending adding a position here based on this candle. Maybe if price got above the high here, it would make sense. But then you're also kind of extended at that point. It's already moved up quite a bit. I think we've kind of missed the buy here on this one. Okay, so if you didn't get in on this candle, I'd be looking to maybe take some profits, especially if you start seeing weakness on Monday, and especially if it breaks under that low. Okay, here's DRI, Darden Restaurants, still looking strong on the daily chart, up 1.36% on Friday. Here's the weekly chart. So that looks good, very strong still. I don't have a position in this, but it's a beautiful chart that I brought up many times. Uber. Now this one has pulled back. This was Stephanie Link's final trade back on June 17th and June 22nd. And I talked about this a little bit, that I felt like it was building on the weekly chart, a flag, a bull flag. And that's another pattern that's very bullish. But it's still in that formation, in the building out. In order for this to be considered a buy signal, it needs to break through that channel that you see there, that trend line. It needs to get above the Kijun. It needs to get above that $87 level. So until that happens, I wouldn't be jumping into this one. Okay, but it is building a bullish, potentially bullish pattern that might pop soon. The next earnings are on August 5th, so you have a little bit of time. RDDT on the daily chart recently broke through the Ichimoku cloud. That's always a very bullish, that's the beginning stages of a potential bull market for stock. All right, that's the beginning stages. And I say that because in order for this price to move, it does need to break through into the cloud and then get through it. And you can see that we've got a higher low here than the prior one. We've got higher high here from the prior highs here. So we are technically in we have a uptrend, okay? So on Friday, though, we got this reversal candle. So I wouldn't be jumping into that one on Monday, obviously, based on that alone, unless it could break through that 148.27. It looks like that's what the high is, 148, or exactly 148. So if it breaks through that, maybe. But again, you have to be extra cautious in this environment. Here's a weekly chart on this one. It's going to find resistance right at the Kijun in the 26 period. That's about 10.8% away from where we currently are. So it's got a, you got a little bit of a, you could make a little bit of money in this one, maybe about 10%, and it reaches that 185 level. So we'll see what happens with that, okay? And guys, guess what? That's going to do it for this video. I'll be posting another video today, so look out for that one. And I hope you all have a good weekend. I'll talk to you all later.